Welcome to This Week in Money. I'm Jim Goddard. Today, Institutional Advisors Chief Investment Strategist Bob Hoye gives a look at the action on the markets the past week, including gold and oil. InsideTrackTrading.com President Eric Hadik talks about how cryptocurrencies have performed and their historical perspective. Are they the modern-day version of tulip mania? He also examines the world currency market. Ed Steer, founder of EdSteerGoldandSilver.com, gives us his perspective on the precious metals market. He has the latest from GATA, the Gold Antitrust Action Committee. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. We'll talk to Bob Hoye right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the Chief Investment Strategist for InstitutionalAdvisors.com. Welcome back to This Week in Money, Bob.
Yeah, well, here we are.
The markets this week, what stood out for you?
Well, I guess it would be the sharp spike up earlier in the week in crude oil. And then our research put out that the market rise was getting overextended, and then the high was 72.90, and it closed the week at 70.71. So it was a hit, but it took out a previous correction. So you can't say that the action has reversed, but we were looking for the industrial commodity prices to rally out to around May. And on my calendar, it's around May. And we got the prices up when they should be. Yep, that's good. So, but this, of course, is tied to the U.S. dollar, which has been firming. We were looking for it to bottom early in the year because it was very oversold. But if you want to have a really good eventual rally, you want to have a good base build, and spent 4 months building the base. And then when the dollar index rose above its 20-week exponential moving average, then that was the breakout. So we think the dollar has got a long ways to go, and it's not going to be friendly to a number of key commodities such as crude oil and the base metals. They have been firm, but they sold off. Actually, the base metals had a very, very good jump in April, sort of one of those silly season things where all of a sudden a big short squeeze comes in and straight up they go and straight up they come down. So the commodities, industrial commodities, were likely to rally out to around May. We've got that, and they're selling off, and in coordination with the rally in the U.S. dollar. So probably the highs for the year may be in. Just a minute, I'll get lumber. And lumber, oh yeah, it really soared. It was a terrific rally. It was at 473 in early March. That was a down dip up to 648 last week. And then you had 2 days in a row which were down limit $15 each, so it's now down to 589 levels. But that one looks like an important top is in. But then the other thing you want to look at is seasonality on these things. And there can be a seasonal low late in the year for lumber. There can be a seasonal low later in the year, like around November for copper. Crude oil, often you can see a seasonal low in the December-January window. And then the other day I looked up the seasonality trades for the Canadian dollar itself. Guess what? Seasonal low around December. So this is going to be interesting as we work our way through the summer.
We'll have more with Bob Hoye next on This Week in Money.
Always consult your investment professional before making any investment decision.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm-shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh shear zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're chatting with Bob Hoye. Bob, how are government bonds doing?
Long bonds were up, which is sort of a quality play, and the junk bonds were down, which is getting away from risk kind of thing. So there was some appropriate action there as well. And the stock market was down a little. Bank stocks were down a little. The broker-dealer stocks were down a little. So more or less an up earlier in the week and down on the week.
Gold below $1,300 US per ounce. Anything behind that, and do you expect it to come back?
At some point. You never say never, Jim, but again, gold trades off of the U.S. dollar, and the U.S. dollar has been firming, and that puts gold and silver down. Silver was down a little more than gold was, and this is the other thing about when you're in a rally for the precious metals, and if it's a good rally, then silver will outperform gold. And then going the other way, when both of them sell off, then silver underperforms. So I think we're in a period where probably from after mid-year, silver could decline quite a bit relative to gold. It sort of works with the whether you're expanding credit conditions or contracting. And if we've been in a party, let's face it, a financial party, and the gold-silver ratio did come down with that, like it usually does, and then it's been creeping up, but nothing dramatic yet. But if the gold-silver ratio breaks out, then it would start to be saying, oh, watch out, there could be some problems in the credit markets. Now that, a little hint on that coming out this week, where for the last few weeks you've seen comments about weak currency for Turkey and a weak currency for Argentina, and with interest rates rising in each of those countries. Well, in the last couple of days, it was Italy. All of a sudden, the Italian yields, their 10-year note went up in yield. And, of course, this is what happens, is that if you have distress or a reversal in lesser bond markets and currency markets, it will eventually feed into the senior market. So this one, I guess the Italian market was the weak sister, and the yields went up there. And I don't think that'll stop. It could eventually affect even the German yields or British yields, and of course eventually into Canada. Of course, the 1997, I think it was the Asian crisis, and it started in Thailand on, I always remember the date, July 1st, when all of a sudden the Thai currency dropped and their interest rates went up, and then the establishment said, "Oh, there's no problem. It'll be isolated just to Thailand." A few weeks later, it spread to the Philippines, and then the response in that one's from the central bankers was, "Oh no, this will be constrained." And it finally hit New York in that September when they had their corporate bond market had one of its worst months in many, many years. So when you have trouble in outer exchanges, it eventually feeds into the senior exchanges, and it's sort of ironical with the yields in Argentina up to about 18% when it was only a couple of years ago when they floated a 100-year bond, and it was oversubscribed, and I think the yield was about 8% on it. So those people are well offside on that one now. So interesting week, Jim. Firm earlier, but enough things trading together. Like if you've got the industrial commodities prices going down, that's worthwhile paying attention to. You've got the U.S. dollar going up. That's also important. You've got the long bond price heading up, which is better. That's a flight away from risk. And then you've got the junk bonds heading down in price, and that's getting out of risk. So it's a very interesting week.
Bob, thank you so much for being on This Week in Money.
Very good.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Coming up, Eric Hadik, InsideTrackTrading.com president.
Always consult your investment professional before making any investment decision.
Aben Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Aben's management has extensive potash exploration and development experience in Thailand. Aben will have marketing advantage compared to Western producers. Drill program commences this spring. Aben trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, abenventures.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to This Week in Money, Eric.
Oh, well, thanks for having me back, Jim.
Cryptocurrencies back in December were all the rage. Bitcoin was over 20 grand. Now everything about cryptocurrency seems to have just faded away. Was this the modern day version of the Holland tulips that rocked the stock markets back in the 1600s?
Well, if it were, they should be almost worthless by now, but, I certainly, you can't deny that there was a bubble there or a parabola that really got way ahead of itself. There's two ways of looking at it. One is kind of like you're describing, those that just look at it as a bubble never to be heard from again. I look at it more like your NASDAQ of the 1990s and 2000, whereas there was no doubt, and we've seen the validation since then, that the tech stocks were the wave of the future. But the NASDAQ got way ahead of itself and ended up losing 80% of its value from March of 2000 into October of 2002, and then took quite a bit to recover and really get going again to where in the last year or so finally surpassed those highs of 2000. So it's one of those things that, similar to that I think it, from a more fundamental perspective, it certainly is something that it's hard to deny is going to be part of the future, whether it's any of the specific cryptocurrencies that are in existence now, or whether they're just the pioneers that often get slaughtered on the way to a different evolution of cryptocurrency. I still keep saying that for me, one of the important things I'm watching is the strategic drawing rights of the IMF. And not that that would be a replacement, but that something like that could be a little bit more of what you see a couple of years down the road, because there's more national governments that would be a bit more favorable to it, or not as antagonistic against it, and there's just a lot of things starting to line up where that's concerned. So all that to say is, I think we certainly saw the culmination of a parabola back in mid-December. Even as we were leading into it, I was discussing how you've seen, up until that point, you had seen three major advances in Bitcoin. Each one lasted almost 5 months to the day. And if that one in late 2017 was going to replicate what the three preceding ones had done, it would peak in mid-December, 5 months from its mid-July low. And that was exactly when Bitcoin tested that $20,000 level and never to be heard from again. So it certainly fulfilled some timing aspects. It fulfilled a lot of what you see from a parabolic move, but more like the tech stocks of the early 2000s, I think it's something that needs to kind of consolidate, have all the Johnny-come-latelys lick their wounds, start to build up a bit more credibility, and then down the road you see it start to build a more solid and less extreme uptrend.
Do you think one of the factors might have been Bitcoin going on the Chicago Mercantile Exchange where people could short it?
I think that from both a anecdotal, coincidental type of factor, that when you see things like that, they're often the omen of an important top. But yes, the fact that it gave hedgers and short sellers a vehicle to more decisively and more with greater confidence take on the short side, even if it was primarily a hedge against positions that they were holding, it can often become something of the tail wagging the dog, that when you see a little bit of a setback, then you get a little bit of piling on mentality, and all of a sudden something like that futures contract, where there's leverage involved, can drive some of the action of the underlying vehicle. So I agree with you that was certainly one of the factors. Another thing that I see too is, in many respects, Bitcoin, like gold, is often viewed as kind of an anti-dollar. And so when the dollar's really suffering, when it's in more of a convincing downtrend, not just a run-of-the-mill sell-off, but something that's starting to get investors worried, that's when you see money flow into those anti-dollar vehicles. Used to be primarily gold, but now you've got cryptocurrency really fighting for that mantle as well. And so you saw the dollar dropping from January of 2017, accelerating down into September, then rebounding, and then it was right in that December time frame when the dollar dropped to new lows. And it's often that move when it now, instead of breaking to new 6 to 12 month lows, all of a sudden it's breaking to new 1 to 2 year or 1 to 3 year lows. And that's the type of thing that gets traders' attention. And so you saw it spike below the previous lows. You saw Bitcoin and at the same time gold and silver were also really accelerating. Now they moved higher as Bitcoin was turning back down. From December into late January is when gold and silver really saw their surge. But the dollar showed that spike low was just kind of an anomaly, and it has first settled into a bottoming phase and then started to rebound ever since then. And that has taken a lot of the froth off of first Bitcoin and cryptocurrency, and then in late January did the same thing to precious metals. And so all of a sudden the dollar has a bit more confidence, and so those other vehicles kind of get pushed to the back burner for the time being, where you've got your real aficionados and advocates are still holding it or accumulating it, but the speculating masses are not ready to pile on and really drive it into another accelerated move until they see some reason to. And as long as the dollar's recovering, I think that kind of keeps a lid on your anti-dollar vehicles, for lack of a better term.
Do you think governments around the world, too, threatening to legislate or in some cases legislating Bitcoin and other cryptocurrencies was also a factor in the decline of the computer money, as I called it?
No doubt. Some of the steps that China took towards the end there, the end of the parabola, when they first announced restrictions, Bitcoin had a sharp drop, then all of a sudden it was kind of clarified, and Bitcoin came back, headed up to new highs. Then China put on much greater restrictions, and that started to slow the uptrend a bit. It like in anything, it's the synergy of multiple factors. You get one of those coming out, and the particular market that it's impacting might take a hit very briefly, then it resumes because speculators just see that as, it's a time to buy the dip. But then you start to get several of these factors coming together in a limited window of time, and that's what often creates tops and bottoms. And that was certainly the case in Bitcoin. There have been some intermediate cycles as well that I continue to document in my weekly relay, and one of them had to do with an approximate 4-month cycle between specific lows. And you saw corresponding or intervening lows in mid-March, mid-July, and mid-November of last year, and I was looking for a similar pullback low in mid-March of this year. Bitcoin ended up extending that about 1 to 2 weeks past my ideal time frame, but that was when it set a multi-month bottom. But at the same token, you had a series of cycles that were telling me to look for an intermediate high in the first part of May, and I think we've fulfilled that too. And I'm looking out towards July as really the next key time frame I'm watching in Bitcoin. But it has, surprising to me because of it being such an infant market and a market with very limited database and whatnot, it has adhered surprisingly well to a lot of consistent cycles that I watch and price patterns and wave structure that I watch in other markets. It's been, like I said, surprising to me that a market like Bitcoin has adhered to those technicals even better than a lot of other markets do, probably because of a little less manipulation in it at times, or on the whole, I should say. So it's in more of a trading range and acting like a market that is recovering after a frothy bubble-like move for the last 6 months, 5 to 6 months of 2017. So I am looking, like I said, at that time frame in July. If there are certain levels holding at that time, it could be a an ideal time to start looking back at the long side. But again, there are a few other factors that need to line up before I would say that with any level of confidence.
Eric, on the currency front, Argentina is in trouble. Venezuela, not just in trouble, in deep crisis. Pakistan is now having trouble. But Pakistan this time around, instead of asking for help from the IMF, they're going to the BRIC fund set up by China, Brazil, Russia, and India for help. Is that a change in the world monetary scene?
It is another affirmation of what I have been discussing for the last decade or so, and I'd have to go back a couple steps to put that in context. But what I traced out years ago was this 40-year cycle that really governed currency wars and battle for currency control. And my conclusion a decade ago was that 2013 to 2021 would be the next phase of that battle, and that it would involve a chipping away at the dollar's dominance in global foreign exchange, and that you would see China start to edge its way to the forefront. As we entered that period of 2013 to 2021, and just to kind of even put that in context, you can go back 40 years, all the way back to the founding of America in 1773 to 1781, and see a consistent battle like this, going back to the foundation of our country when the colonists flirted with fiat currency, the Continental, and it collapsed from 1775 to 1781, was finally out of existence at that time. And going forward, every 40 years, it often involved gold and silver versus paper currency. Even in the 1850s, there was this suspending, first a reduction of gold and silver in coins, then a suspension of it, then the battle over the gold standard in the 1890s, the confiscation of gold and silver in the 1930s, and the collapse of Bretton Woods in the 1970s, and the inflationary debacle that followed that. And so 2013 to 2021 set the stage for that. I explained why I thought China would be the one really leading that, and almost from the start, you saw them making these big moves, even though it was kind of a getting their ducks in a row type of thing, and with different allies in those endeavors. One of the first was the BRICS New Development Bank, and almost the same time, China was also involved in the Asian Investment Infrastructure Bank, which is headed in Beijing. And shortly after that, you had China making several moves, and even things going on with the the SCO, or organization that's as much of a military and economic cooperation. Then you had them issuing or initiating the Shanghai Gold Fix, giving them an important inclusion in the fixing of gold. And shortly after that, in October of 2016, it was the inclusion of the yuan into what I referenced earlier in our conversation, the strategic drawing rights at the IMF. And for the yuan to be included in that was another major step for China. But really, a lot of this came about because of the Western financial and economic collapse of 2008, 2009, and many of these nations seeing that they couldn't rely on Western monetary discipline to be there when times got tough, And so they started to create alternatives, and that is definitely what you're seeing. And so I also explained that in this 40-year cycle, in most cases, the first half of that period, and I'm talking about 2013 to 2021, the first half of that, is often the events going on a little bit beneath the radar, behind the scenes, and then it's the second half when you start to see validation and confirmation of those events and people starting to recognize their significance and where they play into the whole global economic structure. And so what you're describing with Pakistan is just a perfect fulfillment of that cycle and of the expectation, and I think you're going to see more of it in the coming years, where China and Russia's involved in a lot of those endeavors, and they're wrestling some of that dominance away from the U.S., away from the West, away from the dollar. It doesn't mean that they're going to replace the dollar, but even a modest change in the dollar's role in a lot of this global exchange could have such a momentous impact on the value of the dollar that it wouldn't necessarily take a huge shift, but just a steady one.
We'll have more with Eric Hadik next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're chatting with Eric Hadik. Eric, also another place where we're going to see, or perhaps might see, a monetary crisis is Italy. The Five Star Movement looks like it's going to be forming a coalition government there. They plan, their proposal is not to pay back any of the things that they owe, especially to Germany, and maybe perhaps even return to the lira instead of using the euro. And what's that going to do to the euro scene?
The whole situation in Europe, and particularly this almost standoff now between Germany and Italy, is factoring so well into these longer-term cycles that I've discussed, where Europe and European Union is concerned. And my conclusion years ago was that 2018 to 2021 would be the time when you would see a final breakdown of the current structure of the European Union, both monetary and geopolitical, and a restructuring of that. Not that it's all going to collapse, but that there's going to be a pretty significant shift, and it may even come out of it, whatever union that is, may come out stronger. You saw things like Brexit certainly leading into that, and the Spanish or the Catalonia referendum doing a little bit of the same thing. But it's been a matter of waiting for that next shoe to drop within the euro, You go back to 2008 to 2010 and everything that went on with Iceland, and then Greece after that, a couple of years after that. And attention has been focused on a couple of the other countries, Italy included, as being the potential next shoe to drop. And with this election and with what the Italian governing party is certainly proposing, like you said, they're very anti-austerity, and Germany having to have picked up a lot of the tab during the Greece debacle. I don't see them doing it again, and so that could be the straw that finally breaks the camel's back. I continue to look at 2019 as being a pivotal time for the euro, and I've got more specific time frames within that I'm really focused on. But there's a lot of fundamental factors that are bubbling back up to the surface, but certainly Italy is one of the ones that's doing more than just bubbling.
Some people have proposed that perhaps there should be a Northern European euro and a Mediterranean euro. Would that be a plausible or possible thing to do?
I know I've heard that touted for probably since the beginning of the euro almost. Even in the early 2000s, I remember reading articles in the Wall Street Journal about Club Med, and referring to the Southern Union and the idea that you might have something like that. It may be one of those things that the more disciplined countries decide to form a tighter union, and then whoever's left on the outside is forced to come together and maybe even look towards some Northern African countries, or even a couple of Middle Eastern, all those that are on the Mediterranean. It's certainly something that I think is plausible, but I have no idea what form that would take and how viable it would be if that they did go down that path.
Eric, looking at the bonds and treasuries market, what do you see happening there?
I have been looking for the bond market to set a pretty important low in the middle of this year. Those markets peaked, the bonds and notes, peaked in 2016, which was the culmination of multi-generational cycles. It was 40 years from a similar interest rate low, since we're talking, since the interest rates are the inverse of where the bonds and notes are. So you had major interest rate low in 76 that then took off along with inflation. You had 70 years ago the lowest low of rates in the last century in 1946, and 80 years prior to 2016, back in 1936, was a major shift in interest rates that really triggered the second crash in the stock market. Had you not had the 29 to 32 crash, that late 30s crash would have been the worst one in about a 50 to 60 year period. So it was very intriguing to me that 2016 lined up so perfectly with those three major cycles, and I think that that the bear market in bonds that started in 2016 still has more to go. I'm looking at late 2019 as being the culmination of this bear market, but in between, I thought that we would see a multi-month and maybe even a multi-quarter low take hold in bonds and notes right in this time frame, ideally in June, but that's kind of a plus or minus 1 month on either side of it. So I think that we're going to see some factors that maybe start to temper some of the expectations where interest rates are concerned, or maybe there's some geopolitical events that suddenly add a little bit of caution to this idea of more and more and more interest rate hikes. But whatever the fundamental factor is, the technicals and cycles were just saying to me that I thought that the first, or really the second major phase of this decline should culminate around June of 2018, and that we see at least a 3 to 6 month period of consolidation following that.
On the energy front, is oil going to stay in the $72 range, or could we see $100 oil soon?
I think that we are definitely at the time and place where we should see a multi-week peak in here. I don't think that energy markets are going to put in a larger degree peak until the third quarter of this year. Currently, I'm not looking at anything around $100, but a lot of my expectations for the next 2 to 3 months are going to hinge on where this expected pullback takes them in the coming weeks. I could see a quick drop into the first half of June, and again, what crude and the products do at that time will start to hone my expectations looking out into the third quarter. But right now, I don't have a real strong final target for that time frame.
How are transportations doing?
The index?
Yes.
It has been steadily recovering like the other stock indexes. But I'm looking at late June in a lot of the indexes. Now, the transports often lead these turning points, but I think we could see a significant second peak in a lot of the equity markets in mid to late June. And then you start to see a little bit more of a convincing decline follow that. But over the last few months, transports have recovered like the other indexes. They're more like the industrials, where they're about mid-range between their January high and I think it was March lows, March or April lows. But they haven't been significantly impacted by the rising price of oil. But like so many things, it's when a lead market like oil goes into a little bit more of an extreme phase that then you see these correlations start to really take hold, or you see speculators react in corresponding markets or vehicles out of fear based on that extreme move.
Eric, can you tell us a bit about Inside Track, the philosophy behind it?
Well, the philosophy is really incorporating cycle and technical analysis along with the fundamentals to give a better, really a better timing factor in trading the markets. And I often emphasize, especially when I'm hit with more of your technical antagonists who state things like, oh, well, they're just lines on a chart. And my comeback is, so is an EKG or an EEG or a sonogram or anything else. They're all just lines on charts. It's what those lines represent. So it's understanding what the technicals are representing, not just looking for, flag patterns and stuff like that. I've got some technicals that give a much better and more comprehensive assessment of what's going on in the market and when things are shifting. And I think that that's the real benefit of technical analysis, is giving you some lead on what's going on, often beneath the surface at first, which is where a lot of trends start. It's a very subtle thing. And the other benefit of technical analysis is certainly giving you specific risk points. when someone's saying that they're going to, bet on this market or that market because interest rates should go higher or should go lower, there's really no definitive risk point to identify when and where you're wrong, and so it just becomes a shot in the dark or a blind holding and hoping, whereas technical analysis gives you more specific parameters of where you're right and where you're wrong.
And it gives you more confidence, does you? Taking a look at how it's worked out historically?
It does, and also knowing that I've got a preset risk point where it's going to tell me, as hard as it is to admit sometimes, but where the markets are going to say, nope, you're wrong on this, or at the very least, you're early on what you were expecting, that, the market needs one more wave or one more move before it's going to accomplish what the rest of the indicators are showing you. So that, I think, is one of the things that gives me the most confidence, is just knowing that there's a level where those indicators are going to tell me I'm wrong, and so then when I'm getting into something, I can kind of calculate my risk and how much I want to commit to that position, and keeping it rather conservative within an overall portfolio.
Eric, what got you interested in the historic cycle of things?
That has been a little bit of an evolution since getting introduced to the markets in the late 70s, early 80s, but I would have to say that being introduced to a lot of Gann's work, and a lot of it is very esoteric, and I'd say probably the majority of it I went through and didn't find fit with my approach to the market, but the overriding idea of cycles, and then just studying a lot of history, and it just constantly amazing me how consistent things were, even expressed by the old saying of those that don't learn the lessons of history are doomed to repeat them. Those repetitions often come on a very consistent pattern and periodicity, and just starting to realize that there are natural cycles, for lack of a better term, that just keep recurring throughout time, and that there are some very natural events and recurrences that provide some corroboration to that too. I mentioned the 40-year cycle, and it's really only been in recent years, or the last decade or two, where scientists have started to talk about what they call the Great Conveyor Belt in the sun. And you've got your sunspot cycle that's been a pretty known cycle for really hundreds of years, but this conveyor belt has to do with what really drives solar storms and sunspots within the sun, and it's, lo and behold, pinpointed to a pretty consistent 40-year cycle. So you've got the sun impacting everything on Earth, from climate to even psychological of the masses, psychology of the masses, and it turns out that it's in perfect sync with this 40-year cycle that you've seen repeat throughout history for millennia.
Eric, how can people find out more about Inside Track?
The best way is to go to our website, InsideTrack.com, and actually we're in the midst of shifting that to InsideTrackTrading.com, so both sites are up and running at the current time. But InsideTrackTrading.com has the most current information on it. And there's also an archive of articles pertaining to the 40-year cycle at 40yearcycle.com. Oh, and I should go back to both Inside Track and InsideTrackTrading.com, or with that extra I in the middle, INSIIDE, track or tracktrading.com. And that's the best way to find out a lot more about our services and contact us if they'd like to take that further.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com, and as we just found out, InsideTrackTrading.com. tsx.v.com. He was speaking to us from the Chicago area. Coming up, Ed Steer, the founder of EdSteerGoldandSilver.com, next on This Week in Money.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Ed Steer. He's the founder of EdSteerGoldandSilver.com and a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Edmonton. Ed, welcome back to This Week in Money.
Well, I'm always glad to be on your show.
Ed, gold dipped below $1,300 over the past week. Is this pullback good enough to propel gold higher?
Well, certainly it is, and the reason we went below $1,300 is for all the usual reasons, and that's because J.P. Morgan and the other bullion banks rigged the price lower so they could cover as many short positions as possible. And now we're in a very, very bullish situation for gold, and even though we've rallied back above that mark, we haven't penetrated the 200-day moving average to the upside. So we're all loaded for bear here, and prices could go higher at any time, but they'll only go higher if they're allowed to go higher.
Are gold and silver stocks leading the metal prices yet?
Well, I'll tell you what, the silver stocks certainly are. If you take a look at the silver charts, and I break them out silver versus gold, the gold shares have been lagging horribly. They're just absolutely putrid. Whereas the silver shares have been trending upwards quietly since the middle of February, and the silver equities are vastly outperforming gold at the moment. That will change in due course, but it was my opinion that there's a stealth accumulation of silver shares going on at the moment.
Silver continues to be in a certain trading range. Is silver likely to move higher before gold does?
I wouldn't think so. I suppose it's possible, but I think if silver decided it was going to rally $3 or $4, there'd be a lot of questions asked why gold and platinum and palladium weren't doing the same thing. So I think that when silver goes, they're all going to go at the same time. So I think the proper question would be, will silver move faster than the other precious metals? And I've been following silver analyst Ted Butler's work for decades now. And there's no question when this breakout finally does happen and they're allowed to rally, the price of silver will vastly outperform any of the other precious metals.
How are the latest commitment of traders' numbers looking for gold and silver?
Well, as I alluded to before, gold is now on the launch pad to move substantially higher, and silver has been in wildly bullish territory now for many, many weeks. It varies between wildly bullish and white-hot bullish, and it's been that way now since in April. So it's been like that for 4 or 5 or 6 weeks. And regardless of if there's a negative change in the COT report today, it's still going to be in the wildly bullish category. So precious metals, gold, silver, platinum as well, palladium as well, copper as well, they're all set to go. So the COT report is looking very, very positive.
Are China and Russia still snapping up every piece of gold they can find?
Every piece of gold they can find. Russia's added, I don't know, how many, 600,000 ounces of gold to the reserves in April. China doesn't report it, but I would say that they are adding gold to the reserves at that rate or even higher. And Russia's been adding gold to its reserves, in the open now, because they publish their numbers on the Russian central bank website every month. And they were open about it, whereas the Chinese are very quiet. But you can certainly tell that the amount of gold being snapped up by the central banks of the world, whether it being reported or not, has certainly been on the rise for the last 5 or 10 years.
Was it a mistake for Canada and the UK to sell off all of their gold?
Well, I wrote a big piece about Canada's gold back in 2001, and my opinion at the time was that Mulroney got talked into it in an attempt to bring down the Soviet Union by lowering the price of oil and the price of gold, which were the way Russia got most of its foreign exchange. And Britain sold its gold back, and I can't remember what year the Washington Accord was signed, whatever year that was, in order to bail out the relevant bullion banks at the time that would have gone under if they hadn't. And so was it a mistake for them to sell their gold? Absolutely, but they had to save the financial system at the time or help bring down the Soviet Union. And if they had to do it again, I'm sure that they may have done it different. But in hindsight now, the fact that neither of these countries has anywhere near the gold they should have, it doesn't look good for them in the future. Should they start acquiring gold again? Yes, they should, absolutely any time, but I think that the moment that Canada announced that it was acquiring gold or UK announced it was going to increase its gold reserves, I think you would see the price of gold react to that virtually immediately, because right now, without question, the demand for physical gold in official circles is much higher than the supply. And like I said, the moment they make that kind of announcement, the price of gold would react instantly. But yes, both countries would certainly be increasing their gold reserves. I know Canada was suggesting that it was also going to melt down some precious coins that they had, and the coins are worth a lot more to collectors than they were for their face value or their bullion. Again, another mistake by government? Well, the thing is about those coins is the fact that there's lots of them around, and if they decided to sell them all in the open market as coins, it would, the numismatic value of those particular coins, which are the $5 and $10 gold coins from, I think it's 1911, 12, and 13, would instantly decrease their value to just basically melt. So I wasn't happy to see that kind of, historic artifact get melted down, and they have been melted down. I wasn't happy at all to see it happen. I understood the reasons, but that didn't make me any happier about it.
We'll have more with Ed Steer next on This Week in Money.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of the Gold Antitrust Action Committee, better known as GATA. Ed, is a silver short squeeze still possible?
Oh, certainly. We talked about the Commitment of Traders report already. If you look at the numbers in there, the short squeeze possibilities are just absolutely mind-boggling. Like I said, Ted Butler's been writing about this for years. And the day that J.P. Morgan, which is the ringleader of the price management scheme and the precious metals in general, and silver in particular, decides that they're not going to go short the next rally, well, then the shorts that are in the silver market right now, which mostly manage money traders, are going to be in a world of pain in very short order.
Because silver's an industrial metal as well as a precious metal, does it look like there will be a silver shortage?
Well, there isn't right now because there's no retail investor demand. investor demand for silver bullion, silver coins, I don't care whether it's Eagles or Maple Leafs or what it is absolutely in the toilet. But the moment that the price starts to rise, whether it be $2 or $5 or $10 or $20, at some point the retail investor will return with a vengeance, and I mean a vengeance. And the retail pipelines are very long and very skinny and very hard to fill. And I can guarantee that within days or weeks at the most, you'll see a retail shortage in silver immediately, which will pretty much turn into an industrial shortage in very short order. So is there a shortage? Not yet, but the day is coming when there will be, and that will certainly propel prices higher as well.
Is that because silver is so popular when it comes to wiring things that are very sensitive like computers, because it's one of the world's best conductors of electricity?
Well, it has huge industrial applications, and more are being found every day. I mean, you can't think of anything that's electronic. Anything that's electronic that doesn't have silver in it, it's a very, very tiny component, a fraction of a gram in some cases. But when you've got millions and billions of items that it goes into, the industrial demand for it is huge. So the industrial demand is a huge component, but like I just alluded to, the price will be determined on the edges by the return of retail investment demand. And like I said, when it comes back, it'll come back in a hurry.
All the solar panels have silver as well, don't they?
Absolutely, and there's just no way of getting around the fact that the solar panel, which are becoming more and more popular all the time, and increasing numbers are being produced every year, gobble this stuff up at an enormous rate. And industrial, there's only a certain amount of supply out there, which decreased last year, or was the same as last year. So industrial demand is not going away; it's increasing a small fraction every year, and it's a huge component of silver demand.
Are new silver mines being developed, or because of low prices not being looked at?
Well, I can tell you that silver is being consumed much faster than it's being discovered and brought into production, mainly for the reason you just said, because at $16 or $17 U.S. silver, the really cheap stuff to mine has already been found and is either sitting there waiting to have a mine built on it, or is already in production. So there's no question that until silver prices rise substantially, we're not going to see any new silver mines out there.
What's happening with the junior gold and silver stocks?
Well, I own that. Most of my portfolio is in the junior producers, and like I said before, there's been a stealth accumulation of silver shares over the last 3 or 4 months, and the majors may take the hits every day, but the juniors keep plugging along. And if there's any place that I would recommend your listeners be involved in, is in the junior silver producer category, because when the moves come, those will be the ones that have the biggest gains of all.
Are gold and silver prices moving higher in Canadian dollar terms?
Well, it all depends on what the U.S. dollar is doing, doesn't it? You take a look at the euro, which is just plunging right now. The value of gold versus the euro is rising every day. And, I think we're paying about $1,600 Canadian for, $1,600 or $1,700 Canadian for an ounce of gold right now versus the $1,300 U.S. spot price. So depending on what the Canadian dollar does, that certainly affects what you pay for an ounce of gold or an ounce of silver in Canadian dollars.
If Russia ditches the U.S. dollar in favor of the euro, would it be good for gold and silver and bad for the U.S. dollar?
Well, you'd have to think it would be a negative for the U.S. dollar. And if it's a negative for the U.S. dollar, it would be positive for gold. That's a very hypothetical question. I know Putin put that to everybody at the summit in Sochi or in St. Petersburg yesterday. I think if the Europeans go along with it, we'd certainly see a sea change in the value of the U.S. dollar index. But that's hypothetical at the moment, but there's no question about it. I'm watching it with great interest, as are lots of other people.
Ed, what's new with the Gold Antitrust Action Committee?
Well, we continue to give our interviews like I'm doing now, and I know Bill Murphy's doing it, and so is Chris Powell. I was in Vancouver at the resource conference, was it 2 weeks ago, and I gave my talk there, and a couple of interviews as well. So we're out there, passing out the word, preaching about the price management scheme and the precious metals. But, you know, I can tell you right now it's an open secret that it's going on. There's nobody in the mining industry now or in the investment industry that's been around for any length of time that isn't aware of the fact that a small group of bullion banks led by J.P. Morgan Chase are rigging the precious metal prices in particular and all commodity prices in general. So, you know, everybody knows about it, and, you know, so our efforts have brought fruit, but nobody will ever admit the fact that we're right about it, and they certainly won't write about it in the public domain in the major newspapers, so that's always been a struggle. But GATA keeps marching on regardless, and sooner or later it will all come to an end.
Ed, how can people find out more about your newsletter?
Well, just have to Google my name, Ed Steer, S-T-E-E-R, and the website is edsteergoldsilver.com. And they can click on my website, and I have a free sample copy of what they would be getting every day. And if they decide it's worth their effort, they can subscribe.
Ed, thank you so much for being on This Week in Money.
Always my pleasure.
My guest has been Ed Steer, founder of edsteergoldandsilver.com. He's also a director of the Gold Antitrust Action Committee. If you'd like to get a hold of him, how can they do that, Ed?
Just go to my website, and there's a Contact Me tab there, and they can send me an email.
Ed, thanks again.
You're welcome.
And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Eric Hadik, and Ed Steer, and thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, it's been an exciting week, Jim.
President Trump has done the critical materials and minerals sector a big favor. What did he do, and how does that affect your company?
Well, President Trump has issued a executive order on critical minerals in December of 2017, and that is reaching the end of its cycle now, and a lot of news is starting to come out on it. But what they really did is they identified minerals and metals that the U.S. is 100% or 50% dependent on, and that's half the that's getting close to 70 different minerals. But in some of the more critical ones, and you know that we've been calling ourselves a critical metal company for a number of years, over 10. And it's because we do have critical metals, and certainly manganese is one of the ones at the top of the list where the U.S. is 100% dependent on it. But now, they're also very dependent on cobalt and lithium, and we even have a niobium property. They're dependent on that niobium and graphite. So we cover a large spectrum of what's out there, and I expect that we'll get a lot of attention out of that. For example, the Critical Materials Institute, which is part of the DOE, came out with a publication on cobalt, and specifically lithium and cobalt demand, and they're heavily involved in research with public companies or with private companies, and on the trying to settle that demand down. And of course, recycling is a big part of that. So, I think we're going to get swept up in this next phase of the market, which is again the critical materials. So I think it's time that we discuss that a little bit. Certainly, as our shareholders should be aware, one of the key figures in this is Dan McGroarty, who's on our advisory board. And Dan advises the Congress on this, and he's been pointing up this weakness for years and years, and finally Trump, realizing that they couldn't go through life without being dependent on especially hostile countries for a lot of these materials. So we've got a lot of it sitting either in batteries that we can recycle or in properties that we have. We have cobalt property, we have a niobium property, we have a manganese property, and certainly the recycled material contains the graphite and lithium that is also critical. So, we're kind of all over this, and this was basically by design when we decided to call ourselves a critical metals company back in 2007, 2008, and now we're finally, at the forefront of all this. So, when it comes to critical metals, Trump is very serious about getting the Congress to act on pushing for some kind of resolution through some of the bureaucracies that they have, and which should be the Department of Defense and the DOE, and when you look at the Critical Materials Lab, that is a part of the DOE, and so these guys are working ahead, and we expect that we'll be in the loop somewhere when it comes to resolving these problems. And critical metals is key to the Defense Department in the United States. It's key to the quality of life that the United States and Canada, for that matter, enjoy. And so now they're coming into their own, and we're already very excited about the recycling situation. And I think that people should start maybe focusing on this critical metal arena, because we're involved. And on the same note, I'd like to say that we will probably start next week with some press releases, which I feel are very good. And things are moving quite rapidly through everything that we're doing. Cametco is starting the build of the small pilot plant, and they're waiting for some long lead items to come in. I mean, these are not off-the-shelf items, some of them, and like the filter presses and that, they're not off the shelf, especially in the sizes required by our pilot plant. But that's moving ahead, and the focusing on getting new patents is moving ahead, and it's a very exciting time. So we had a pretty big day in the market yesterday. It looked like a buyer came in and bought up a lot of stock, and that kind of has dwindled off today, as the volume is way down, and it's not unusual for us, but we're around 100,000 shares, and between the two markets, the U.S. and Canada, we had we're not even close to 100,000 yet, but we had 600,000 shares yesterday. But it does show that we're starting to get some people that are recognizing this and taking decent positions in the stock. And I think that you'll see more and more of that moving forward. We have another conference coming up in June that I will be announcing in the next week or two. And we've already got meetings set up there, and I'd have to say that, I've been complaining about the fact that we were not getting a lot of attention out of the Western world, but recently we started getting attention out of Europe and the U.S., and people are really, sitting up and paying attention to what we're doing. So I see good times ahead, and that's the basics thumbnail of what I wanted to talk about today. So I'll turn it back to you, Jim.
Larry, for new listeners, what is the outlook and what is the plan for American Manganese?
Well, the outlook is to get our patents and to move ahead with the pilot plant, get involved in a commercial plant, hopefully with a partner, and that looks potentially possible. And the outlook, I think, is nothing but great. We're in the right arena. I just talked about critical metals, and now we're talking about critical and scarce metals when we talk about cobalt. And we could be a big supplier of that. As a matter of fact, I'm thinking that we'd be in the realm of being able to produce maybe 20% of the cobalt needs in about 6 years or 7 years. And that may sound like a long time, but in the meantime, you're making money as you move along. But it's going to get more and more massive. The recycled material is going to accommodate a lot of the new batteries. And with recycled material, you're not really concerned about buying it from child labor in the Congo or anything like that. It's got a clean aspect to it.
Larry, where are you traded and under what symbols?
We're traded, our chief exchange is the Toronto Stock Exchange Venture, and we're traded under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can do due diligence on us, and a lot of people are, on our website at AmericanManganeseInc.com, or you can phone me at 778-574-4444, or shoot me an email at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome.
We've been speaking with Larry Reaugh, President and CEO of American Manganese. I'm Jim Goddard. Our conversation took place on May 25th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, President of Aben Resources. Welcome back to the show, Jim.
Thank you very much, Jim.
What can you tell us about your drill program this spring?
Well, I've just put a news release out this morning. We are set to get in there. We'll have boots on the ground in the second week, pretty much early second week of June. Drill hopefully mobilized. We're gearing for about a week later, so the second to third week, in the middle of the month is what we're basically saying. We're going to drill up to 5,000 meters. We're going to go right back into where we left off last year in that the north boundary zone where we, on the first drill pad, it was the most northerly drill pad in the boundary zone. We hit in all three holes off that pad at 45, 60, and 75. A good broad intersection of mineralization with a very high-grade core. High grade, I'm talking 6 to 7 grams gold, 6 grams silver, and 1% copper. In the first hole, second hole is 10, 11 grams gold, 14.5 grams silver, and 1.5% copper. And these zones are up to 380 87 meters wide, and with good mineralization throughout. The shortest one, the deepest one, was about 94 meters wide, with a good solid high-grade core to it. So we're really thrilled with it. We're going to go back in there and carry on, basically just do some step-outs from there. In the meantime, boots on the ground, what I alluded to is more mapping, because that whole region we're in, the whole area of the North Boundary Zone, a little bit to the north, but extensively to the south, is all heavily mineralized. There's lots of surface anomalies of gold, silver, copper, and then lead, zinc, silver. And we're going to have good hard looks at that and a lot more sampling to guide us and for future drilling. This is how we found the zone we're in, exactly. Rock samples, chip samples. We're in an area that has reasonable exposure, so we want to follow up on that. And as we head south, there's an area to the south, actually on the forest property, which is the Southern Claim Group, that has a very, very distinct IP anomaly. We want to drill just to the north of it, because our earlier sampling from 2016 was a real solid gold anomaly. We'd like to drill through that, and we'd like to test the anomaly. That's later in the program. If we have success in the first short period of time, going back into the North Boundary Zone, we have the potential of expanding our drill program.
Jim, where's all this action taking place?
We are in the Golden Triangle of northwestern British Columbia. Our property is right in the heart of it. It basically is aligned with the Kerr Fault, which acts as a major structural engine for the region. That's why our property is 50 kilometers long and narrow, because we follow the fault north to south. So, as far as a location goes, it really couldn't get any better.
Where are you traded and under what symbols?
We're traded on the TSX Venture Exchange under the symbol ABN.V. We're on the OTC. We will shortly be on the QB, but right now it's the OTC pink sheets, ABN.AF, and Frankfurt is E2L2.
Where can people find out more about Aben Resources?
Well, you can call here and either ask for myself or Don Myers. We're at 604-687-3376, or at the website you can come in through info@abenresources.com.
Jim, thanks for the update.
Thank you very much.
I've been speaking with Jim Pettit, president of Aben Resources. I'm Jim Goddard. Our conversation took place on May 23rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.